Hello and welcome back to Beyond the Deals podcast. I am your host, Gabrielle Simmons. I am here today with Nathan Wheeler with the Miliari Group, which I pronounced wrong the first time. Thank you for being here.
It's my pleasure. Thanks for having me, for sure.
Of course. Nathan is a financial strategist and literally the person I was looking for to join our community with his level of expertise and broad knowledge in all of the different things that can help all of us as investors, wholesalers, everyday landlords, people who even are renting and don't own any real estate. But Nathan has a wealth of knowledge to bring us ways to protect and expand our wealth and our lives and what we know will be the end of them someday, right? Quick shout out to our sponsor, Builders Outlet. Builders Outlet is your go-to for windows, doors, cabinets, and trim. They are located here in Denver, Colorado. Check them out by going to buildersoutletco.com. Okay, that's the hard part. So Nathan, I would love for you to give us more of an introduction about who you are and what you do.
Yeah, it's always interesting because like when people ask, hey, tell me about yourself. It's like, how far back do I go? Where
All of it.
Where do we want to start?
Let's start today, and then I'm going to go back to little Nathan, your childhood, all the things.
Dude, there's so much there. But professionally, I was in the Army for a while. That's what brought me to beautiful Colorado. I was with 10th Special Forces Group down at Fort Carson.
Oh, wow.
We moved here from Italy. And, it's funny because I thought I was going to die in or retire out. Like, for me, the Army was going to be it. Ended up not having it that way, right? Life doesn't go the way we plan it.
Right.
And so I ended up getting out of the military, and I didn't know what I was going to do. Quite frankly, that's one of the hardest transitions I've ever done. Like, one of the hardest things I've ever done was transition from the military back to civilian life. And that's weird because I didn't expect that to be the case. Like, I figured it'd just be like, hey, here's the next thing that we're going to do.
And they don't really prep you guys, right? Like, they don't give you a whole lot of help of how to make that transition.
I hear it's gotten better. But when I was in, there was nothing. You know what I mean? Like, don't get me wrong. There was like a little 3-day class or something that I had to go to. They talked about resumes. Like, it was nothing. Just full transparency. But I hear it's gotten a lot better.
Good.
And so anyway, I get out. I don't know what I'm going to do. Right. And so I ended up just spending some time, kind of reflecting, and then ended up going back to Afghanistan for a little bit on the Special Operations Joint Task Force. I spent some time downrange, came back stateside, contracted for the government in different areas. Like, I was training the military. I helped, establish the Space Force and some things there. We got some programs off the ground there.
Cool.
Went to work at our combatant command, just writing the campaign order, which outlines the branch of the military, how we're going to execute the national strategy.
Okay.
And then from there, I went to work with a company called Deloitte. And it's funny because I had never heard of Deloitte, but apparently they're a big deal.
I have, but I don't know why.
Yeah. So they're one of the big four. And I remember they kept, like, when they were prospecting me, they kept saying that, like, oh yeah, we're one of the big four. And I'm like, look, I don't play sports.
But Aiden, what does that mean? We're the big four what?
Right. I had to look into it. And so they're one of the largest auditing and accounting firms on the planet.
Oh.
So they're good at what they do. And they moved into the government public sector. And that's kind of why they hired me. They were like, hey, we need people who've got expertise in this space. Come work for us.
Yeah.
I was like, sure. Because I had looked into them a little bit. And it was funny when I initially looked into them, I go to their website and I'm looking at them like, hey, this is a really nice website for a brand new company. Turns out they're 172 years old, one of the largest, most prestigious firms on the planet.
That's funny.
It was cracking me up. And so anyway, I worked with them for a little bit, and I left a few years ago to pursue a career independently in financial services.
Okay.
And so,
why? What even got that on your radar?
right? Because I could have given you a million scenarios of like, what am I going to do when I grow up?
Right.
Not one of them would have been financial services.
See that? Yeah.
And so I was saving, when I was in the military, I was saving in a thrift savings plan, which is like a federal 401k.
Okay.
Right. And so this is the vehicle that's supposed to sustain me for the last third of my life while I'm not working. And so I'm saving in it. And by the way, when we start, and our veteran community can resonate with what I'm about to say. I remember when I went through basic training, they're like, hey, if you save $200 a month in this account, you're going to retire in 20 years and have $1 million.
Wow.
No market circumstances in the history of this country would have ever led to that actually happening. So they were just talking.
Oh.
And so after about 10 years, I realized that it's not moving the way that I need it to if I actually want to retire.
Yeah.
And this is something, by the way, that people don't think about.
Right.
They don't think about retirement, whether they're working a job, investing in business, investing in real estate. A lot of people don't think about like, hey, what is my supplemental income going to be?
Yeah.
What are the considerations that I need to take in any regard? And I was one of those people.
Yeah.
Until I wasn't. And so I sat down with some professionals to learn, because there is no financial education in this country.
Right.
Like, I'm telling you, we've gotten
School, even college.
I'm telling you.
Yeah.
We've got people on the team who've got doctorates in economics and finance who are learning things that we're teaching them.
Basic, yeah.
And so I sat down with some professionals and I learned about strategies for cash accumulation and asset protection that I was entirely unfamiliar with. And also that sounded too good to be true and too good to pass up. So I'm like, all right, whatever. Young, dumb Joe, I'm throwing a couple $100s in a month.
To what?
To specifically an index universal life insurance policy.
Okay.
And I didn't know any better. When I sat down, they're talking about compound interest, tax advantages. They're talking about things that I was
Sound great.
You know what I mean? I was smart enough to know that this sounds really good.
Yeah.
But also naive in the sense that I had no idea, what they were really talking about. And so I started saving, and I was transitioning from the military at the time too, starting that process. So there was just a lot of things going on, but I was smart enough to latch on to the things that mattered.
Yeah.
So after about 6 years, I realized the significance and legitimacy of what I'm doing financially, right? Like this vehicle that I'm using, which I just want to be clear too, there are thousands of financial accounts out there. All
Options are abundant.
right. And so I'm not just going to sit here and be like, hey, this is the only, but I will say for me, I realized, hey, this is actually pretty powerful. The tax advantages, the compound interest, the things that I was taught about this vehicle were legitimate. And so it was at that time that I decided to get licensed. And I had no intent to change my career. My brother was leaving college, starting a career. And I was like, yo, let me help my people. Like, I got to share the things that I've learned.
Yeah.
And so I got licensed. My brother was my first client.
Amazing.
And then things just started like, it was almost like an explosion, right? Because I started getting referrals. I started, just focusing on the education bit.
Yeah.
How does money grow? How are we taxed on that growth? What does an analysis look like? And how do we build to get to where we want to go?
Yeah.
And I started doing that. And it just, like I said, it started blowing up pretty quick, just having these conversations, primarily because, again, people don't know what they're doing. And a lot of...
Meanwhile, sorry, you're still at Deloitte while this was starting? Okay.
Yeah.
This was your side hustle.
Yeah, if you will, for sure. And I was making what I thought was really good money. So I wasn't thinking about changing my career. Like, I was at a position, I remember growing up, we're like, hey, dude, what do we got to do to get to 6 figures?
Right.
I got to 6
Ultimate goal.
You know what I mean? Like, yeah, baby, that's baby money.
Right.
And I realized that, though.
Yeah.
Because I started outpacing my salary when I was just supplementing my income. I'm telling you, when I say I was sometiming it, I mean, maybe 6 hours a week.
Wow.
And I started outpacing my salary. And as that happened, there was a multitude of things. It was like just the perfect storm. I realized we'd entered the greatest transition of wealth in the history of the United States. We're losing financial professionals. Those two things are happening because baby boomers are dying and retiring.
What year is this?
That was 2022.
Okay.
Yeah.
How long ago?
No, it was not that long ago.
Yeah. And that's amazing considering all that you've done in that time.
Yeah. I don't always stop to reflect on that. Here's the thing. Success is a mindset.
Yeah.
You know what I mean? So when you decide you're going to do something and you're like, hey, this is what I'm doing, and you start moving in that direction, things start happening.
That direction starts moving closer to you too.
You know what I'm saying?
Yep.
And so I saw this perfect storm. And then also in this industry, a lot of people pick a lane. Securities, banking, insurance, they stay in that lane. That's their primary focus. They don't look at the big picture. In most cases, they're captive to an organization, so they're limited to that company's products and services. And I'm not saying there's anything wrong with that, but I just saw these things and I was like, how can we do better? That's just the way my brain works. Like whatever I'm doing, it's like, okay, how do we increase efficiency? How do we do the things just better?
Yeah.
And so I dove in. And it was kind of crazy. Part of me wants to start talking about the entry into this industry, and I'll touch on it just a little bit.
Please.
Part of the reason that I decided to go full-time, it was not the money that I was making. Money's cool, but it's never been my primary motivator. Coming out of the military, like I said, it was a challenge. And we're going to take a train real quick because I'm going to share with you, I just want to share with you how I'm going to get to where I'm going in this thought.
Yes.
As I got out of the military, I wasn't sure how I wanted to keep playing the game. Or if, I don't want to dive that deep, but I will say this. I realized in a moment that I was at a low that like what motivates me and drives me in life is sharing my knowledge and experiences, my resources, my network, the things that I've accumulated throughout my life, sharing that to the benefit of others.
Mm-hmm.
And so now fast forward.
That's so much bigger than money.
It really is.
If you have millions of dollars, but you can't do that, if that is what is important to you, that's what speaks to you. That's what creates passion, makes you want to get up in the morning.
Goosebumps. Like you can't see them because I got this jacket on, but I got goosebumps. That is it.
Yeah.
And I realized that. And so the money wasn't the thing that drove me to be like, oh, I'm coming all the way in. It was because when I initially started in this industry, I realized very quickly that not everybody is looking out for the best interest of the people that they serve. I mean, think about it. Humans are just greedy in general.
Yep.
How do you think it is when we're talking about one of the most lucrative industries on the planet?
Right.
And I learned very quickly, like with Index Universal Life specifically, if you don't structure it properly, it's not this, magical vehicle that it could be. And when I say magical, like it's dang near magical. You know what I mean? But
what I understand about it, it seems magical. It's all the things we can do with our money.
I agree with you. It's powerful, but it has to be properly structured and max funded. And so I saw the people that I had started in this industry with, not only were they not structuring them the right way, but they were turning away clients for things that they shouldn't have been turned away for. And I'll give you a small example there. We had a client, they had, some money, like $20,000 in a 401k, and they wanted to roll it over and get it protected because there are financial products and vehicles that you can move money into that are protected from downside market risk. They have no fees, and some of them offer guaranteed lifetime income, and we can do all that without sacrificing growth. And so
tax benefits typically,
it
and
depends.
Protected from bankruptcy or lawsuit.
That's IUL for sure. Okay. I'm talking about something different right here, a fixed indexed annuity specifically.
Okay.
Because it was my stepdad, and he was coming up on that retirement age. He wanted to do something. They were like, "Hey, that's not enough money to move over into that account." And in reality, it was. And in reality, during that year, I don't know if you're tracking, 2022, the average retirement account lost 23%.
Oh.
So even though it wasn't a lot of money, we could have taken the time to help it. I didn't know at the time. And it would have protected the loss that he later experienced.
Wow.
So it was a couple of things that just started happening that I was like, yo, I just planted my freaking flag. And I was like, this is where I'm at. I'm going to be the difference here. Watch.
I love that.
Dude, it's crazy. Like even because I don't always stop to reflect on this. I'm very action.
Yeah.
You know what I mean? So this conversation is great because it's giving me a second to reflect on like my experiences over the past few years.
Yeah.
And so come January of 2023, I partnered up with a team and organization that they just had all the right pieces. The mission was where, like, we were in alignment.
Yeah.
You know what I mean? When it comes to helping and serving the client, the way that we operate, when it comes to building a team and organization, because I'm a builder, the impact that I want to have can't be done with just me.
Right.
So I'm looking for people to do the things that we're doing, and I found some of those people, and we're always building. And so I was like, this is it. This is where I'm going to be. These are the people.
And that in itself is a whole nother level.
Oh yeah.
That passion of that, what makes you want to get up in the morning, of being surrounded by like-minded people. And it sounds like a simple thing, but it literally makes the difference between our health and our sickness as far as we could go with that.
100%.
When we're surrounded by people that align, and then feeling our contribution of being able to pour into those people and this community, this space that we're creating.
Yep.
That's, to me, what life, career, money, right? The purpose of what we're doing here, to some degree, I don't want to get too philosophical, is what it's about.
Yeah. No, 100%. It, like, life-changing doesn't do it justice. Like that, that little 100%. And so January 2023, I lock in with these people, and I remember I went to a good friend of mine. His name's Nick Bosley. I went to Nick and I'm like, hey, what records have yet to be broken? I'm a little competitive. You know what I'm saying?
A little. Yeah. I don't know. So I feel you're a lot competitive.
And he was like, hey, nobody's graduated these two academies at the same time at the top of the class. And so I start in these academies, and I intended, because I told him if we start working together, I told him I was going to leave my job at Deloitte. And so January comes, and I go to Deloitte. I'm like, hey, like, I love you guys. I appreciate the opportunity, but like, I'm gonna cut sling load. I'm gonna move out. I got some things that I got to do. I got to chase my dreams. Which, by the way, so many people don't take that leap, and that sucks because, man, The American dream is real.
Yeah.
It really, really, really is.
But that is the key part. We have to chase our dreams. We have to cut the ropes off the parachute, right? And be willing to dive into it.
You got to give up the good for the great.
I like that.
And so I told Nick, if the transfer happened, I'd leave Deloitte. January comes along, I go into Deloitte. Hey, I'm going to leave Deloitte. And they're like, hey, our contract is up for recompete right now. Do you mind hanging out till March? Okay.
3 months.
I go to Nick. I didn't need to ask Nick. I'm a grown up. We can do whatever we want. I was like, hey, brother, I know I gave you my word. How do you feel about this? He was like, no, stay there. You know, don't burn bridges. Do the things. But I had already told him that I was going to do the academies at the same time, which just so happened to be that Q1. So I'm working full time, going through our certified academy, going through our elite academy, all at the same time, and dominating. Like just crushing it. Like it's so you
have to.
Dude, right. I can't because I'm competitive.
Yeah.
And so March comes along and we're getting ready to kind of, finalize it. And it was hard. I love Deloitte, great company, great people. Everybody that I interacted with there was people that I would love to continue to interact with.
Yeah.
But I had to keep my word. And so my wife, 7 months pregnant at the time with our fourth child, and I'm leaving my 6-figure salary to go pursue a career that I've dabbled in a little bit.
With no guarantees.
Dude, no guarantees.
No salary.
No salary. It depends on me, my effort, my commitment, me. And I thrive in that environment. Let me be responsible for my success. And so I did. I jumped in. It was March 24th, 2023. Best professional decision I ever made. We've been having great success since then. We've got.
How did your wife feel about that leap?
Yo, that's a good question. And I don't know if I've ever paused to legitimately ask her, but here's
She'll be here later. I can ask her.
For sure. The most important part though is she was supportive of it.
Yes, that is.
I didn't, again, action oriented. So I'm very much like, hey, we're going, you know what I mean? And so I didn't necessarily stop to be like, hey babe, how do you, and in reflection, now the new version of me would, because I grow, I develop, and I've learned in my organization, see, we're not just a daggone team of professionals. We are a family, and we focus on faith, family, finance, fitness, and fun. And we grow in all of those areas. And the impact that our team and organization has had in my life in those areas is profound. And so now I would 100% ask Daniela before, but I didn't back then. And so all I know is she was supportive, and it wasn't without challenge.
Right.
You know what I mean? Any level of success, it's right on the other side of your comfort. So you're going to get uncomfortable. You're going to be challenged. There's going to be adversity. Everybody else around you, they're going to try to keep you in that little box, in that persona that they've established for you.
Right.
So as you're living into your potential, everybody else, I think the thing is about that, and sorry to run off on this tangent, but everybody else around you, when you start leaning into who you want to be, who you intend to be, who you were meant to be, when you start leaning in that direction, most people know that they're not, and they have a little bit of resentment.
Yeah.
And they're going to try to keep you right where they had you, whether it's because of resentment for you or resentment for them.
Yeah.
And so
they want a friend there.
Yeah.
They want to stay in that space, and they want you to be there with them.
Yeah.
Yeah.
And I've lost some of the friends that I had, not only in pursuit of, my career here, but even in different things that I've pursued as far as personal development is concerned. And
yeah.
So no, it's been a very interesting ride. And like I said, although I didn't ask her, she was extremely supportive. And we now, I've got a couple hundred associates across the country. I run a nationwide firm. We have direct contracts at the top 192 companies in the industry. We partner with the largest estate planning network in the world. I've got a DST firm that I partner with to help, especially with.
Tell us what DST is.
Delaware Statutory Trust.
Okay.
Right. So a lot of people, just to break that down in real quick in layman's terms, there's different types of DSTs, but you can 1031 into a DST.
What's 1031?
It's when you sell a piece of property and you realize gains, you have to pay tax on those gains unless you 1031 into another piece of property.
Yep.
Right? And so sometimes we may not find that piece of property that we want within that 45-day period. So we can leverage a DST, right? And like I said, there are different DSTs. There are cash flow DSTs that mature at 3 to 10 years, and you can receive monthly income when leveraging some of those. And at maturity, you'll realize whatever gains, whatever the appreciation is, and then you can move it into another piece of property, or pay taxes,
or keep it there,
it there.
Yeah, which I wish I knew. I attempted to do a 1031 exchange with my first duplex that I sold to avoid, because I made my gains were like over 100K.
Yeah.
And so I'm like, I don't want to pay the government this
No.
big old chunk of money. And so I attempted to do a 1031, knew nothing about a DST.
Yeah.
And ended up not doing it because of the time frame. It was like, oh, 45 days. Oh, I haven't found the right property to move this into.
Yep.
It ended up being like 60 days. Had I known you and other options, I could have avoided owing Uncle Sam a big chunk of money.
100%. 100%. And most people don't.
Yeah.
And there's other DSTs that are I typically more for legacy. And I can dive into some of that, but you can 1031 in, and then after 30 days, do a non-recourse cash out refi, take out up to 86%. So instead of paying 20 to 30% in taxes, you're investing 14%. Now you have this tax-free access to capital. And there are different things that you can put in another real estate, put it into an IUL, borrow against the IUL while your money's gaining interest. And now it's gaining interest over here. So you've got money working, the same money working in two places for you.
Yeah.
Right. And that stuff, I mean, we could dive if you want to dive. But
give us a little more. Yes, we need this for the viewers. Yeah, education.
So let's talk about IUL for a second. Because
this is a very common thing.
Yeah. I hear a lot of people talking about it. They're like infinite banking and family banking and universal banking. There's different ways that people describe it. And some people talk about whole life insurance for infinite banking concepts.
Right.
Some people talk about index universal life insurance. There are 4 major types of cash value insurance that can be used for cash accumulation.
When you say cash value insurance, simplify that.
Yeah. So I don't know if there's a way to simplify it. Like,
just meaning that you can get access to your own cash.
100%.
That you have invested into this account.
Right. And so let me break it down a little bit. There are 4 major types. And why insurance in the first place? Well, I mean, it's life insurance, permanent life insurance, so that you have life insurance. But it's the #1 provision in the Internal Revenue Code for beating taxes. I'm like, money in an insurance policy grows tax-free. It can be accessed tax-free, and you can pass it to a loved one tax-free without delay from probate.
That is huge.
It is huge.
And most of us are in real estate. And 9 times out of 10 in real estate, at the end of somebody's life,
yeah,
expected or unexpected, what we hear so often is probate.
Yeah. Oh, yeah.
And what that looks like, and the tax obligations that come when we die.
Yeah.
Not if, when we die.
Yeah.
So the plan to avoid what you just said is so important.
It's so friggin' important. Because we're talking like for a contested probate, like 1/3 of your total assets. If it's uncontested, you're still looking at like 10% of your total assets.
Just paying somebody to sort through what's what.
Taxes and legal fees.
Yep.
Yeah. And so, yeah, it's ridiculous. And we should absolutely plan for it. You know, I got a trust for like $1,000, and I used to spend more than that on a weekend in Italy getting drunk with a bunch of paratroopers. You know what I'm saying? Man. But when it comes to these, there's, again, 4 major types: whole life, universal life, variable universal life, index universal life. Here's the thing. The goal is to keep the cost of insurance as low as possible to maximize accumulation.
Yep.
Right. And so there's different ways to structure these different things. I can do all of them. We have access to all the things. But I'm a huge fan of index universal life. And why? Because you can structure it effectively to where the cost of insurance is less than it would be otherwise. And that your money is growing as effectively as it can based on the performance of an index like the S&P 500, the NASDAQ, the Dow Jones. There are dozens of indices. There are tons of indices out there that we can leverage for the growth on these accounts. But then past that, you're guaranteed no loss. This is something that people cannot grasp.
Right.
Compound interest is powerful. It's extremely powerful. I think it's something like if you were to fold a piece of paper in half 44 times, you'll reach the moon. Insane,
because
right?
of the compounding.
Compounding.
The compounding effect.
Yes. Because when you're not experiencing loss, even if the market goes down and you're just locked in at a 0% or whatever, you're not going down, so you don't have to spend time rebuilding.
Right.
So when it comes back, you just go up from where you were.
Yep.
And that's why index universal life, for a lot of reasons, why it's been very, very powerful. But past that, there are things called, when we access the money, we take it out in the form of a loan. That's what helps maintain its tax favor.
Can you give me numbers? I think just like in real estate, I'm like, give me numbers. Give me an example.
Yeah, sure. So like two different types of loans. There's a declared rate loan, which typically, and different companies and different products call it something different, right? But I'm just going to keep it simple. Declared rate loan. And in this way, they would charge you a 3% interest rate are charged a 3.9% interest rate for the first 10 years and then credit a 3%. Now that's one company. I'm thinking of one company right now. There's another one that charges 2.9 and credits 2, right? Either way, the first 10 years about a 0.9% interest rate on the loan.
That
If you're borrowing from the account, that would be the interest rate that they would charge for you taking the money out of your account.
Gotcha.
After year 10, it becomes with the best companies, it becomes a wash loan where they'll charge you like a 3 or a 2% and credit you a 3 or 2%. When you take out a declared rate loan, the money that you borrow does not stay in the account gaining interest.
Okay.
Right? And that's where the participating loan comes in, or indexed loan or alternative loan, whatever you want to call it. And in most cases, they'll charge about a 5% interest rate. And so people might be thinking, well, why would I pay 5% if I could get a 0%? Well, because the money that you borrow stays in the account gaining interest. So if you have $1 million and you take out $500,000, you're still getting interest on $1 million.
Right. And that's what's so powerful about that as a whole.
And when you do the math, let's say you get a 10% return on a declared rate loan and a 10% on a participating loan, the maths. Even when you factor in the 5% interest rate, you're still netting positive with the participating loan because you're gaining interest on a greater amount of money.
Right.
And so you have that money in the account gaining interest. You borrowed against that account. Now you're going to go funnel it into something like real estate. You're making money there, 20 to 30%, whatever, depending, right?
Yeah.
You're making some money there. And ideally, what would be, in most cases, in the best interest of the individual is to funnel that money back into the IUL. And that's where that banking, that, universal bank, that's where that comes from, right? Is because you can legitimately be your own bank. Now, one of the things that I hate about how some people represent these products is they're like, oh yeah, you'll be your own bank if you fund it with $500 a month. You'll have a solid tax-free retirement supplement and you can access that money before you're 59 and a half and you can have fun and do the things. But if we're talking about like legitimately being in your own bank, you've got to put enough money in to be your own bank.
Right.
Does that make sense?
Yeah.
And so there's different ways to structure these strategies based on the needs of the client. But that whole, be your own bank concept is a very real thing. I've got clients doing it right now. I got clients who are putting $650,000 into an account each year.
Nice. Into an IUL?
Yes.
Okay. So give me a couple like common myths, because for me, that's a myth that I've heard, that you can only put like X amount. You can only put a maximum of $100,000 into an IUL, or you can only, right? What are some of these common myths that you hear that you're debunking?
Yeah, for sure. So that one in general, the amount of money, so in the 80s, in 82, 84, and 1988, there was legislation that kind of fought the battle over these policies. You know what I mean? Even before IUL was there, but it was for life insurance in general.
Okay.
That basically dictated how much money you can put into the account based on the age, the health, and the death benefit.
Okay.
Right? And so if you want to save more in the account, you have to increase the death benefit. We can't change your age and your health, but we can change the death benefit. So like how much we can put in according to the IRS, it's called MEC. When you exceed the limit set forth by the IRS, it's called a modified endowment contract, meaning you put in more than what they allow you to based on your age, your health, and the death benefit. So if we want to save more, like we structure it based on how much you intend to put in the account, which will adjust the death benefit. Does that make sense?
Yeah.
So if I have a client, for example, that wants to put in $500 a month, maybe the death benefit is $250,000. Right? And that will allow them to put in $250 a month. And we may build in flexibility so they can save more in the future, but you don't want too much flexibility because again, the goal is to keep the cost of insurance as low as possible. And if we're increasing the death benefit, we're increasing the cost of insurance.
Okay.
Does that make sense?
Yeah.
Now, if we have another client, for example, I'm working with somebody right now who wants to put in $150,000 a year, the death benefit's gonna, in this case, because again, it depends on the age and the health, there's other factors, but in this particular case, it's going to be about $2.3 million in death benefit. And that's going to allow him to put in that $150,000.
Okay.
So that's it.
And that's interesting for someone like me who I've looked at several IULs and my question, what I've always trying to understand is like, I don't have kids. I don't need a substantial death benefit.
Yeah.
I would like to be able to contribute, let's say $250,000, $500,000 a year into this. So that means I would have to have a higher death benefit.
100%. 100%. And then, there's so many different companies that offer these products, right? And in each company usually offers more than one of them. And so the big things that I look for, like when I'm structuring it for cash accumulation or, like what you just mentioned, the big things I'm going to look for as far as which company, which product, how are we going to do it? What are the index allocations? Like what are the index options that we have to leverage growth in that account?
Right.
Right. Because they're not all the
Max them
same.
out.
Right.
Some might be 6, some might be.
Some have caps, some have lower participation rates. Like there's different things that determine how the money's going to grow. So that's what I'm looking at. How's the money going to grow?
Yeah.
The next thing I look at is the fee structure because you're paying for something.
Yeah.
No matter what, whether you put it in an IUL, you put it in an IRA, you put it anywhere, it doesn't matter. You're paying for something. You got to know what you're paying for and how much you're paying.
Right.
Right. And so I look at the fee structure. And if it's properly structured and max funded, you'll get to a point where you're paying less than 1% of the accumulated value. And some companies offer conditional credit where they start contributing more to the account after like year 16. And so in some cases, you'll be getting paid compared to 1% of the accumulated value. Does that make sense?
No.
Okay, let me give you an example. Let's say the accumulated value is $1 million.
Okay.
If that's a managed account and you're paying 1%, that's $10,000.
Yeah.
Right?
In a fee.
Yes.
$10,000 fee. Yeah. Okay.
In a properly structured max funded IUL, not only will the fee, in most cases, be significant. If it's properly structured and max funded, it'll be less than a person, 10,000, right?
Or 1%.
Right. And then in some cases, let's say the fee is $1,500 that year for the account, but they're giving you a conditional credit of $2,000. You're netting $500.
Right.
Which is significant.
Yeah.
Especially if we're talking about greater sums of money.
Yep.
Right? Because 1% of $2 million is a heck of a lot. It's a lot of money.
Right.
And so that's another, while we're just having the conversation, that's another myth. Oh, they cost too much.
Right.
Look,
but what are they gaining you?
100%.
Yeah.
And even in the earlier years, because the fees are typically more in the earlier years. Why? Because the company is assuming all the risk.
Yeah.
I got a client right now putting $60,000. We just structured this forward this week, putting $60,000 a year into an IUL. If she dies today, tomorrow, whatever, when the policy is in force, the company's paying out 1.5. Well, I think it was $1,053,000, and she only put in $60,000.
Wow.
So in the earlier years, it is a little bit more expensive because they're assuming all the risk.
Just like a mortgage.
100%.
You're paying primarily the cost of having access to this money.
Right. In year 10 and on, though, if it's properly structured and max funded, again, you're paying less than 1% of the accumulated value, which is powerful.
Yeah.
And then not only that, again, that's debunking one of those other myths. But past that, people are like, oh, it gets so expensive as it gets older. That's true to some degree, right? The cost of insurance goes up because it's an annual renewable term that every year you're paying the cost of insurance at your current age. So as you get older, it does go up. But again, the fee structure will still be, if it's properly structured and max funded, very low. But not only that, a lot of these companies, if you live past 95, there is no cost of insurance.
Right.
There's administrative fees. And so there's a lot of things. There's a lot of things to consider there. But again, back to when I'm looking at these companies, how's the money growing? What is the fee structure? Does it have participating loans? Because those are powerful. Like if you can have your money growing here, borrowing it against it, while it's still growing, making money elsewhere, that's using the same dollar twice.
Yeah.
And then past that, what's the customer service like with the company? You know what I mean?
I wouldn't even think of that. Why would they need to have good customer service? Am I going to deal with these people?
You may, when you go to borrow against the account, like you're not going to come to me to get your money. We're going to go through whatever company, Allianz, Nationwide, Symetra, Transamerica, National Life Group is another one a lot of people use. And there are different companies. But the fact of the matter is, when you go to borrow that money, you or both of us will reach out together and be like, hey, we need to access some of these monies, move them over. And if they're not working with us or being difficult, who wants to deal with that?
Right.
You know what I mean?
Hard to get access to your own money.
Right.
Yeah.
So
that's a good point.
Yeah, for sure. So those are the things that I really look for. And yeah, some of the myths that people say, again, the cost is one that I see quite a bit. When it's properly structured and max funded, it's powerful.
Yeah. I think of it in such like simple terms just because that's how I learn. So as you're speaking it, I'm like envisioning like marbles on like a board, right? And so if you could show someone like, all right, you're putting these marbles here, and then if this company over here is taking one of your marbles because that's your fee, but then they're giving you two. Look at how full this cup is now with these marbles. 100%. If we just keep like demonstrating that, 100%. I feel like that's a simplified way for us, because to me, like numbers, money in itself, because it has been such a big, scary topic in my life, in my family for a long time, it carries such stress. And so when we simplify it into something that is marbles, right? We get it to a whole nother level. And I needed that when I was building my wealth and real estate and encouraging my mom to buy a property and to get an IUL and to protect her assets, because it was a scary thing to talk about until we simplify it.
Yeah. Yo, I'm going to take that. Like I'm going to start using marbles. That's so good, because like when you look at it's unparalleled the things that can actually happen when you're leveraging the right components.
Well, and you're such a professional. You're so experienced in this now and so seasoned. The words, the terminology, and that's why I'm asking. I know a lot of these things, but I'm asking you to simplify for those who don't, because we do it in real estate. We do it in all of our professions, that we're like, oh, I'm gonna talk about DSCR and amortization, and people are like, what are you talking? Now you lost me. What did you say?
I love that. I legitimately think I will start using that. But again, they're very powerful, and there are some of them. A lot of them come with different features. There are some that come with rate lock features. We just got an email last week for a client. We opened the account in April. We can lock them in at a 21% right now.
Wow.
You know what I mean?
Wow.
There's power. There's power in some of these. And when I look at the actual credited interest rates, because again, in this industry, you have so many people, instead of just bringing credit to what they offer, they try to talk down on what they don't offer.
But it's a full package. It's a full picture that you have to understand.
100%. And one of the things that they say too is like, oh, the gains aren't that. I'm telling you, we have clients. Last year I had clients getting 28+%. Wow. Like, it's like, I've seen clients. I saw a client last year get 46%.
Whoa.
I've seen, even now there are some maturing segments that are like 34%. Like, it's just.
Okay. Give us, if you're new in real estate.
Yeah.
Let's say you own one property, your primary residence. Because there's levels to it, right? If I own one property, my planning, my strategy with you is going to be different than John, who owns 12.
Right.
Let's speak to somebody who's new, who owns one property. What would you recommend that they start with in discussion to you, right? Like, not necessarily this is a product they need to go get tomorrow.
Yeah.
But what's the product or products that they should start having conversations with you about?
That's such a hard question to answer, because everybody's financial situation is significantly different. You know what I mean? So if I sit down with somebody, okay, they got a property, what's their debt situation looking like? What's their cash flow looking like? Do they have an emergency fund? Right? Do they have protection?
Let's look at the average American. Let's say no. Let's say they're paycheck to paycheck.
Man.
Right? They have less than, what's the statistic now? Most Americans have less than $2,000 in savings in an account at any one time. Okay. So let's speak to them.
Yeah. So there's a 6-step approach that I take to financial planning. Right? So first and foremost, I start with education. I'm going to teach people how money grows, how we're taxed on that growth, because they need to know and understand that. Then I'm going to look at, again, there's going to be a 6-step approach that I take that's going to determine what I recommend to them.
Okay.
So first thing, I'm going to look at cash flow. I'm going to look at money coming in, money going out. I'm going to look at, what are they doing as far as their tax considerations are concerned? What are they doing for budgeting? Like, it's that basic cash flow type scenario. Yep. We're going to look at that. The next thing that I'm going to look at is really debt management, right? Because that's a huge one. People are drowning in consumer debt. We live in a consumer society.
Yeah.
People are taught to spend first and save later, and unfortunately, they don't have more left to save when it's later, and the money that they're spending is somebody else's money in most cases, and there's an interest rate that's astronomical. Their credit isn't that great, and so we're going to look to mitigate debt, whether in whatever way, because it's not always like consolidating or refinancing. Maybe it's just restructuring. And so we're gonna look at that to do it most effectively. And I know everybody talks about debt snowballing all the time. I'm more of a fan of debt avalanche, because in most cases, when you're going after the highest interest rate first, you're keeping more of your money because you're paying less in interest.
Right.
The math's there.
Yep.
But either way, we'll look at the best way to restructure debt or to eliminate debt.
Okay.
What do we got to do? The next thing I'm going to look at is building an emergency fund. right? This is just, you hit the nail on the head. Like the average American can't, afford $1,000 expense without putting it on a credit card.
Right.
Which only climbs more into debt. So we're going to make sure that we have an emergency fund in place that will sustain those emergencies so they don't turn into crises. The next thing I'm going to look at is proper protection. Because if you're building something and you've got no protection in place, then what do you build? Like even in the Army, security. I was an Army Ranger. Let me tell you, security is the most important. Security is the first in, the last out.
Yeah.
So you've got to have some kind of protection.
Man, this is what, like, I love that how you just answered this question, because I started with the options of the protection and where to put my money and skipped all those other steps.
Yeah.
They're so key.
They are. They are.
Please continue.
We'll look at protection, right? And make sure that everything that we're building has what it needs in place to protect us, our assets, our livelihood, our income. A lot of people don't realize the number one cause of poverty and bankruptcy in the United States is medical expenses related to chronic and critical illness.
Wow.
And so some of these protection components, there's life insurance with living benefits that allows you to access the death benefit of the policy in cases related to chronic, critical, and terminal illness. And the reason it's the number one cause of poverty and bankruptcy is because medical expenses are so high. Even if you have insurance, there's still a fee that you got to cover.
Right.
So they liquidate their assets, they take out a second mortgage, and now they have to spend all the time getting back to where they were if they can.
Right.
Maybe they're not even able to work after a medical crisis.
Right.
So I want protection. I want protection.
Yeah.
The next thing we look at is building wealth.
And that's not just protection over your assets, right? And that I think is super key too. People who don't own anything think that they don't need that.
Oh my gosh. They couldn't be further from the truth, because how are you ever going to build anything again if you don't have security?
Right.
You've got to have something there protecting.
And you're protecting the vehicle.
Yes.
You're protecting yourself now.
Yep.
Like it doesn't have anything to do with the fact that you don't own a house or have a car payment. You're protecting the vehicle that allows you to earn these things to keep yourself safe and fed and housed. That needs to be protected.
You are your number one asset.
Yeah.
100%. Couldn't agree more. And we look at building wealth. And so when it comes to building wealth, we've got to figure out there's different approaches that we'll take. But at the end of the day, I want to identify the financial independence number. Like, how much money do you need to have saved in order to retire when you want without outliving your money? And then we find the best ways to get there, right? While keeping taxes and legal fees at a minimum. Keeping taxes, not necessarily legal fees. That's more preservation, while keeping taxes at a minimum, right? We want to make sure that our money's growing. We're maximizing advantages and minimizing taxes. And so building wealth, again, it'll look different for people, right? For investors, we're looking at building wealth that we can leverage to go and purchase other assets. Other people are looking just to build wealth for a retirement supplement. Maybe they want to save for their children. There are different reasons why we build wealth, and we're going to look at what those are and the most efficient vehicle that will get them there.
Yes.
So that they have, again, tax advantages, they have significant gains, they have accessibility, we consider transferability. What do you want to happen?
Yep.
And that's what we structured around. Not necessarily what I think.
Right.
What do you want to happen?
Yes.
And then that sixth component is wealth preservation. And most people don't even have, they don't have a will, they don't have a trust, they don't have anything. They don't have a power of attorney, nothing, Jake's right. You know what I'm saying? And so it's interesting. I'm glad you brought this up, because like every family, every person, every individual I sit down with, they get access to a basic estate plan that covers a will, a healthcare directive, and a power of attorney at no cost.
Wow.
So you get a basic estate plan.
So when are we sitting down?
Yeah, right now. You know what I'm saying? Like, yeah, whenever.
Let's do that.
And I mean that. Like, this is what I'm here to do. This is my purpose. This is what I'm doing. I planted my flag. I'm not going anywhere.
Yeah.
This is it. I found it. I found my fulfillment. I found the scratch that gets the itch.
Yeah.
That's what I'm doing.
Yes.
And so, yeah. And so again, on that preservation bit, we can do a basic estate plan at no cost, but then we can also come in with the trusts. There are different kinds of trusts, and we can help with all of them to make sure that we are doing the most to preserve our assets and plan for a legacy. Because where a lot of people fall, even the wealthy, they make a lot of money, they leave something to their family and their posterity, but they don't identify how, when, and what they need to do to access those funds. So it's gone.
Yeah.
In 1 to 2 generations.
Deserve it.
Yeah.
Yeah. Oh, I just had a conversation the other day about that very thing where the person I was talking to said most people who build wealth, generational wealth, it usually only lasts 1 to 2 generations.
True.
And I'm like, okay, well, I'm going to be different. I'm building wealth so that my kids,
Yep.
I want 3, 4, 5 generations.
Yep.
And the only way to do that is to plan, is to write it out. And to know that we can do that is so powerful too.
And it's so much easier than people think.
I'm finding that now.
Yeah.
Because I was one of those people. I thought like, what? How? I'm going to have to pay $1 million to structure what I think in my head is this big, scary thing.
Yeah. Dude, I sat down with a young lady. Young people, I always want to help young people. And then I don't at the same time because young people aren't thinking about their future. Yeah. And I sit down with young people. There's several of them. Hey, I want to retire by 50 years old, bring in a tax-free retirement supplement about 6 figures. And we'll structure that out and they can get there. And then they'll turn around and be like, I'll think about it later. And now when I'm 37, when they're my age, mid 30s, like you just sacrificed 15 plus years of compounding and financial strategy.
Yeah.
And so I just sat down with a young lady like recently. And we put together a solid strategy for her. I don't know if she's going to move forward or not, but even on the protection bit, my brain, when you were saying this, that my brain went to the protection bit because part of what I recommended for her was a $500,000 term insurance policy with living benefits. Her insurable needs about $250,000 right now, but I know she's going to be buying a house in the near future. And so it's like, hey, let's make sure we meet that now because the cost of insurance is like $24 for a 30-year term with living benefits.
Oh, heck yeah.
It doesn't make sense not to.
Yeah.
But young people aren't thinking like that.
Right.
They're not thinking about that.
Right.
And I try to help, and I got to get better. Maybe I just need more marbles, but I've got to come up with a better way to like really get the point across. Like the earlier you start planning for your financial well-being, the more financially well off you will be.
And not just planning, taking the action.
Take action.
Yeah, we have to do it. We have to take the steps. We have to buy 2 less Starbucks coffees a month.
That's it.
And put our $30 into that.
Yep. And even if it is like, because I know we're talking products and I don't typically dive into products, but even that, like, don't underestimate the freaking habit. If all you can do is save $5 a month,
oh yeah,
man, you better stick to that $5 like your livelihood depends on it.
Right. And that in itself is such a discipline that allows our money to grow.
Yeah.
When I pressed the reset button with the big B word, I immediately was like, I need an IUL ASAP.
Yeah.
Even though the amount I can contribute is very, very low.
Yeah.
I need that because I need to continue that discipline.
Yes.
And I need that to be top priority more than the feeling of survival mode.
Yes.
Right? Because I'm not going to stay here. I have no intention to stay in survival mode.
No.
I have an intention to be a billionaire.
Yes.
And that means I have to consistently have this practice where I behave like a billionaire does with discipline.
You know, I was talking to one of my mentors. He is a billionaire recently. And there were just some things that we were looking to do, some actions that we're looking to take. And he said, you got to move at a billionaire's pace. And that really, really stood out to me in that whole conversation. You got to move at a billionaire's pace. And when you just said that, it really made me think about that because maybe it doesn't mean like how fast you're running, but it means the consistency. Because how do you win a race? You know what I mean?
Yeah.
And so it really is just
slow, but consistent.
Right, right. And so you've got to, but your spot, slow and steady is not wrong. That's how the turtle beat the hare, right?
Yeah.
So like legit, it's just developing the habits. You're one habit away from changing your life. But most people don't have the discipline to start taking that action that you were just talking about.
Yep.
Right. And so whether it's financially, whether it's physically, whether like whatever area of your life, you're one habit away and just a little bit of discipline away from radically changing your life.
Yeah.
And yeah,
call back to the 5 F's that you referred to earlier.
Yeah. Faith, family, finance, fitness, and fun.
Faith, family,
finance,
fitness, and fun.
Yeah.
Making a significant change in any one of those areas, but especially all 5 of those areas. Changes our lives.
I am not the same man I was even 6 months ago because it's a constant state, right? So whether it's a little habit with faith, I just so happen to be Christian. I don't alienate anybody if they're not, and I don't want them to alienate me because I am.
Yeah.
You know what I mean? So for me, being intentional about reading the scriptures, being intentional about praying, family, being intentional about spending one-on-one time with each of my kids. And letting them know, pouring into them encouragement, praise, and recognition, letting them know how awesome they are. You know what I mean? Like, and then my wife, taking care of my wife, not just, you know, physically and with the things that we buy and have, but like, let me take care of her emotions and her heart. And what does that look like for her?
Right.
You know,
What does it look like for her? That was that powerful you just said.
100%.
Instead of what does it look like to you?
I had to
What does it
learn.
look like for her?
I had to learn that.
Right.
You know what I mean? Because I was a young dumb kid. You know, I wish I could download my brain into the minds of young people so that they don't have to go through, you know, 10, 15, 20 years of mistakes to get there.
Right.
When it comes to finance, do I have a budget? Am I saving? Am I paying myself first? Listen, we live in a consumer society. I've said it a few times. I'm going to keep saying it because it's just a fact.
Yeah.
So people are taught, we literally spend money. We give everybody else, we make money. We give everybody else money before we give ourselves money.
Yep.
Do you know how backwards that is?
So backwards.
The first thing you should do is pay you.
Yep.
You know what I'm saying?
Mm-hmm.
Finance, healthy financial habits. Fitness. Look here. When I got out of the military, I didn't work out for a while. Like I was like, dude, it was a challenge. Like, we're not gonna dive into that right now. It was a challenging time. I got divorced. I got out of the military. It was a challenging time.
You sat and didn't work on your body.
Dude, I didn't work on anything. I worked on a bottle of whiskey. All right. And I knew that I had to get back because, like, you know, I very strongly about the things that I did in the military. You know, having earned a Ranger tab and served in that capacity, it makes me feel some kind of way. And I feel like I have a standard to uphold.
Yeah.
You know what I mean?
Mm-hmm.
And so I had to get back in alignment with that. Like this morning, I woke up, worked out. I got a fractured clavicle right now.
Jeez.
And some other things going on. And I'm not.
On a very, very full day.
Oh, yeah. Yeah. Wake up at 4:30, right? So I get up, do what I can do based on the injuries that I currently have. And I ran a few miles.
Amazing.
You know what I mean?
Yeah.
And not only that, when I think of fitness, it's not always just physical fitness. I wake up, I say my affirmations. I remind me how awesome I am. I tell me how great I am, where I'm going. I take time to envision that. I get my mind, body, and spirit in alignment with where I'm going.
Yes.
You know what I
So
mean?
powerful.
Dude, I love it. It changes life. And then next week, I'm taking the whole family to Cancun. We're going to a 5-star all-inclusive. It's that fun part.
Yeah.
Look, we want to make sure that we're building in all the right areas, but that we have the decency to ourselves to smile and enjoy the ride.
Yes.
You know what I mean?
Yep.
So yes, each one of these areas, you've got to be intentional. And again, small habits in each one of them to shape your identity around who you want to become.
Yep.
Understanding that there's going to be adversity and there's going to be people who are like, no, that's the Nathan I went to high school with who was smoking weed on the front porch, or, you know,
Try to bring you back there.
you know, I'm not, do you know how long ago that was? I'm not the same person I was 6 months ago, let it go 20 something years ago.
Right. Yep.
And I'm not going to allow you to bring me back. I've learned, I've developed, I've grown, I've focused on how to be a better human.
Yep.
Better human. So we're not going back,
Yep.
right? And so, yeah,
You need to write a book. Have you wrote a book yet?
it's a very good question. I'm actually working right now to write a book.
Amazing.
I've been working on it.
Blessing to the world for you to share what you just shared with us in this video, but for you to put this in a book, in an audiobook, I hope,
Yeah.
as well. The way you speak, how you speak, what you're leading from, and can draw others to is very powerful.
I really appreciate that. I really, really do. And you know, as I go through this book, it's not because I'm not ready to unpack my life like for the world. I mean, I'm not scared to talk about anything that I've done or anything that I've experienced.
Okay.
But I don't necessarily want to put that into a book right now. So the book that I'm writing, it's about shaping your identity, right? It really is, because this is so essential. You know, and when I think about identity, there are really 4 pillars that establish your identity, right? It's your associations, who you spend the most time with, really, it reinforces who you believe you are.
Yeah.
Your habits, the things that you do consistently, shape who you believe you are, right? Your affirmations, what you tell yourself, shapes who you believe you are.
Yep.
And then your faith, whatever it may be, your higher power, your purpose, these things, that shapes who you believe you are.
You'd believe you are. Yeah.
And so I'm talking about those things,
Oh, man.
how I've come to those realizations, how to acknowledge, I talk about what a drift is, and that's when you fall out of alignment with who you are intending to be. Like, what is a drift? How do you identify a drift? And then maybe most importantly, what do you do to get back on track? Right? And so that's what I'm very excited about the book. Even I'm talking
I'm
about
very excited about it.
I'm getting goosebumps. It's gonna be good. I'm excited about it.
We'll have to get a whole bunch and give them to everybody in the group, all of our members.
100%.
So powerful.
100%.
I could sit here and talk to you all day.
Likewise.
For the sake of our viewers, we will begin to wrap this up. But please share with us, where can anybody who wants to get in touch with you find you?
Yeah, no, I appreciate you asking. I try to make it easy, right? Even though I'm not like a marketer, but it's Nathan U. Wheeler. My handles on all the social media is Nathan U. Wheeler. It's nathanu.wheeler.com. So it's pretty simple.
LinkedIn, and
all of it.
Your LinkedIn's awesome, by the way.
I
I
appreciate
was
it.
checking it out this morning.
I appreciate that. I appreciate that. I've been doing some work.
Yeah.
So yeah, Nathan U. Wheeler, please, and let's connect. Like I don't need you to just come follow me. Let me follow you. Let me share you with the world. You know what I mean? Because here's the thing, and I know you got to wrap it up. Every single person has like a little key that will unlock the box of success in somebody else.
Dang.
And if we don't put ourselves in a position to share that with everybody,
Right.
I feel like we're doing people a disservice.
Oh man, that is powerful. Quickly, I will mention, when I was about 18, and I graduated high school at 16, living on my own as of 16 and a half, working a job full time, and I worked at Checks Unlimited, and I had my supervisor. She was this really awesome lady, but also stern and strict in her way, but a light of love. And after working there for about a year, I was dating someone at the time, and I decided, hey, I'm going to quit my job and I'm going to go become a trucker with him. And I couldn't even get my CDL, so I wasn't going to become a trucker. I was going to ride along for the ride.
Yeah.
And quit my job and put everything in the hands of a man.
Yeah.
But I mean, that's a whole other thing.
Yeah.
And all I got from everyone was negative. Negative, right? And this woman, and what she said to me, the key to what I believe to be such a big unlocker of my success, what she said to me was, that's a very brave thing to do, and that bravery will take you places. Even if it's not where you think this is going to be with him, or in this semi-truck or whatever, you're being brave enough to take a step towards something that you want, and that's going to take you where you want.
Yes.
That message in itself, right? Now, had I been close, had I not shared, had I not built a relationship with her and not just treated her like a supervisor who told me when I was effing up, right? Like, building this connection with her allowed that space for her to pour into me and give me that key.
I don't know her, but I love her.
Right?
Because everybody will look at the negative aspect, but reshape your perspective to look at the positive.
Yeah.
Because that is very positive.
Yeah.
You're brave. She highlighted the positive there.
And that's it. That's all that matters at the end of the day.
Yeah.
We're always going to get our bumps and bruises.
100%.
But if we focus on the positive, it takes us so much further.
So good. Man, I love this conversation.
Right. We could have a 4-hour-long podcast.
Right.
All right, Nathan, thank you so much. Thank you for being here. I look forward to everything that you're doing in this community, the people that I will get to bring to you, that you will get to connect with in person, online. We're creating such a beautiful space in our home where we live, Colorado Springs, Colorado. It is held dearly to me, this place being where I was born, where my family was born, and just to know that there are people like you in this space that contribute so positively to this community and my community, real estate deal makers. I'm just so grateful. Thank you.
It's a pleasure. I am grateful. Thank you so much. It really is a pleasure. I appreciate you.
Yes, thank you. All right, y'all. That's it for today's episode. Until next time.